Geeta Bedi, speaker of the next session, my colleague in the Manning Council, and dear delegates. Good morning to one and all. It gives me immense pleasure to welcome you all to this 5th International Tax Conference organized by the International Tax Committee. The purpose of arranging the conference is to provide opportunity to the participants to hear leading international tax experts on recent developments on various tax issues concerning their day-to-day practice. The topics selected by the committee are issues on permanent establishment, which is throwing challenges due to growing emergence of e-commerce. And these concepts such as software as a service, infrastructure as a service, platform as a service are throwing enormous challenges for both tax professionals and tax creditors in tricky characterization while dealing with such situation, and mainly amongst them being emergence of PE or not. Since GAR is looming on horizon and is to become applicable from 1st April 2016, the tax planning going forward will have to bear GAR implication in mind. So, inclusion of topic on GAR. Transfer pricing provisions are more than a decade old now in India. For routine transactions, the taxpayers now have the benefit of adopting safe harbor rules also. In a way, latest jurisprudence shows the agility of the tax department, and quite interesting and innovative issues are now referred to judiciary. Moving away from routine transaction of transfer pricing, at Chamber we have included the issues of transfer pricing on business reorganization and certain other highly controversial issues. At times, it is seen that the many joint ventures and collaborations, tax planning and tax structures are efficient from direct tax angle, but service tax is not paid adequate attention to. Service tax, though recoverable in many situations, it becomes a part of cost, and the same being at 12.36% becomes quite significant, and hence a session on service tax as well. Finally, we shall end with a certain practical understanding through a panel of specialists dealing with case studies. This conference is 5th in a row. Its success is due to selection of relevant subjects and positive response and willingness of the learned faculties to share their experience and knowledge. I am quite sure the perfect blend of interesting topics and expert faculties will result in intellectual stimulating sessions. Friends, this conference is going to be memorable for one more reason, and that is tomorrow we will be felicitating our past president and a senior advocate, Shri Y.P. Trivedi, for completing and serving the profession for more than 50 years. With these few words, I will now welcome you. I will once again welcome you all and hand over the proceedings to the Chairman Paresh Shah. Thank you. Respected keynote speaker, President of Chamber Legislation, my convener Rajesh Shah, and my principal coordinator of this conference will fix it. Learned speaker Geeta Bedi, ladies and gentlemen, I'm overwhelmed by organizing this 5th NRRC on international taxation, and I warmly welcome all of you to this conference. Before we go into the technical sessions and other aspects of the conference, let me tell you that we had to change this NRC model this time because of not adequate response, frankly. But quality, we are always improving day by day, and this time also, let me assure you that the excellence of the papers and the quality of the speakers are something which is the top star of the profession. With this remark, and before I introduce the conference, may I request all of us
dignitaries on the dais and the letter speaker to inaugurate the conference by lighting the lamp. Friends, we are all here, the learned international text professionals. I don't want to deal into the technicalities of the conference, but let me briefly touch upon how the International Text Committee have designed this program and what has went into designing this program. You all are very well aware of the international text litigation about in India as well as in the international area. You have a Google structure, the Yahoo model, the online advertising through electronic platform, and there the relevance of fixed place fee is slowly disappearing. And there are issues as to how the physical and the business fixed fee test can be made applicable to such issues. Then the importance of litigation on the transfer pricing area is equally important. And therefore, the relevance is what is the relevance today and what is happening internationally. That was the concept by designing this conference. And then we thought that the transfer pricing provisions and the rest of the international text litigation are more or less proportionately going parallel in the technical and the jurisprudence aspect. So we have proportionately divided the conference session into transfer pricing and the rest of the area of the litigation and the development. So that is how we have the first session on permanent establishment and the digital economy issues. And we all are aware that the permanent establishment and the fees for technical services and the royalties occupies the largest space in the jurisprudence. And we find that fees for technical services and royalty issues are discussed almost at every conferences. So therefore, we try to balance this aspect by considering permanent establishment and the electronic medium as one of the topic of the day to discuss in this forum. And we have, one of the top stars in terms of Geeta Ben as a speaker, and she is our opening batsman. Thereafter, we thought there are about now, we have 12 years of experience in transpricing after the provision has come on the statute. Therefore, it was very essential to summarize the whole jurisprudence in this area. So we thought of such a session into the program, and we have none other than the partner of KPMG as the speaker in terms of Karishma Bhattapekar. Then, considering the relevance in transpricing, we all are aware that the current trend and thrust of the revenue as well as the taxpayer is on the restructuring of the business due to either economic business factors or the tax factors. And so we had a special session within the transpricing, the provisions of restructuring and how it affects the transpricing provisions. And we have Sanjay Tolia, who is partner of PwC, to address us on those aspects. Then the question came that, okay, these are the litigation in transpricing, these are the litigation in permanent establishment, fees for technical services in other area. What is the underlying theme behind this litigation, and what are the approach of the revenue as well as the taxpayers? So we thought, let us understand what is the emerging international litigation trend and India's tax treaty policy to deal with this subject. Because we find the provisions of domestic tax law conflicting with the provisions of the treaty. So we thought of a very well-known and popular tax professional, Mr. P.P. Otswal, to deal with and tell us what is the trend and whether there is any policy with the governments to deal with this trend and what are their minds, so that we can bridge this gap to understand each other. And thereafter we thought, in a practice, we tend to forget the other aspect of the transaction. And service tax on the transaction is on a gross basis, and therefore at a time your advice may be conflicting with the other laws. Therefore, not going into the depth, but at least to identify the issues arising out of the service tax while you advise your client is essential. Therefore, we covered a cross-border transaction and issues of service taxes, and we have, as you know, Mr. Krishnan, who is again one of the top professional on service tax. And then finally, if something is left out, we should cover it by summarizing at the end, and therefore we have a panel session on case studies, so which will cover rest of the issues arising out of the international taxation. And that is how we concluded the entire series and sequence of technical sessions, also in accordance to the importance. With this introduction, friends, I hope you will educate yourself, you will take maximum benefit of this conference and cherish this for all the time to come. Thank you very much, and now I request Madam Malathi Shridharan to address us. And before that, may I request President to present. Yeah, I'm doing that. May I request President to propose and hand over the memento to Mrs. Malathi Shridharan. Mrs. Malathi Shridharan says, I don't have any written introduction, so therefore I have to introduce her as I know her. She is the IRS officer and currently holding a covetous post, to my mind, DIT Transpricing 1 at Sindhya House, Mumbai. Prior to that, she has an extensive experience of representing the department before the L bench and that is, as you all know, that is dealing with the international taxation. And prior to that, she had a great experience as an assessing officer in the TPC, as a TPO. So we have in Madam the assessment procedure experience, the experience of litigation, and now again, as at the helm of transfer pricing, she is deciding all policy matters also in approach of the department, how to carry out the proceedings and how to be most reasonable in the approach towards the tax gatherer and the taxpayers. Yeah, most important that she is also a chartered accountant. I forgot in explaining her position that she is also a professional colleague more than anything else. With this few words of introduction, I present Mr. Malathi Shridharan before you to address us.
Thank you so much for the kind words. Respected dignitaries on the dais and my friends from the profession. I can close this, I suppose?
Yeah.
It's a great pleasure to be with all of you today over here. I don't know what prompts the Chamber of Consultants to invite me, but whatever may be their reasons, I couldn't resist the temptation of coming here, despite the fact that there are many pressing things waiting in the office. So it's indeed a great pleasure to be with all of you today over here and be part of this two-day conference on international taxation and transfer pricing issues. Last 1.5 years, 1 year I have been associated more deeply with transfer pricing as compared to international taxation. In fact, maybe 2 years ago when I was more conversant with all the latest rulings on a day-to-day basis of ITAT, High Court, Tribunal, AR, etc. At that time I did not have occasion to come here. Probably I would have been in a better position to analyze each and every ruling. Now, when there is no compulsion to look at the rulings and when I'm probably burdened with other things, I am being invited more frequently to deliberate on the recent trends. I suppose it is only the outcome of my karma at that time that I am enjoying right now. So yes, it is a covetous post and I am enjoying it for the time being, but may not like to continue here for too long. Because ultimately where you really learn is the ITAT, where you are pitted every day with the best, against the best in the profession. See, sitting in my room in Scindia House and when the assessee is sitting on the other side, it is probably very easy for me to take any view and there is no direct challenge to me on my face. Yes, there will be, once they leave the room, there will be a lot of remarks, but nothing is there on my face. So I am under an illusion that I am doing everything right or I have got everything correct. But I know it is only an illusion, a temporary illusion, as long as I am sitting in that room, which may end any time. So that is the position. So it's very nice to, I went through your schedule for the 2 days and it is really nice to see the kind of topics that you are having for discussion in the coming 2 days. In fact, it was my intention even in my office that once January is over, we'll sit and have a study circle sort of a thing only between my officers and myself and try to understand what is happening, recent trends. But a government department being what it is, we are flooded with so much litigation. Again, an outcome of our own karma only. We have done so many assessments and constantly we are getting some summons from the High Court or from the Tribunal to be present there on a day-to-day basis. So there is no respite. For me, time barring has not got over on 30th of Jan. It continues. Either the DRP has to pass an order in pursuance to the direction of the High Court, or we have to be present in the Tribunal to do a day-to-day hearing, or we have to be present in the High Court to listen to some other strictures. So our time barring really has not ended, and unfortunately, or maybe it is only an excuse which I am giving, my intention to do some serious studies and do some introspection, that has really not taken place. But anyway, I think it is only when I have to come to such forums that I immediately try to go into Taxman or CTR Online. And what I used to do on a daily basis, my CTR Online used to be permanently on in the tribunal. My ITAT Online used to be always one open screen while I was in ITAT. So that is something which I visited after a long time yesterday and today to see really what are the recent trends. So that is the situation that people who really have to do, probably they don't have time to come here. People like me who have time to come here, we are not as up to date as how we should be. But anyway, leaving all that aside, since I have been invited, I tried to see what are the recent trends in transfer pricing and international taxation. International taxation, I think after losing the case of Vodafone so miserably in the Supreme Court, department has literally retracted. It's not trying anything very adventurous now. Even in DRP, we see very few disputes. The disputes are all in transfer pricing. 80-90% of the disputes are in transfer pricing in DRP. International taxation disputes are restricted to issues like service tax, whether it is part of revenue receipt for 44BB or some such other issue, which is really not a very challenging thing to decide. So very restricted, at least in DRP, there are very limited disputes of international taxation which are coming out. So probably we are not trying out too many things in international taxation right now. All the same, if we go to the kind of decisions which we have been receiving in the recent past, whether of high courts, AAR, etc., what I find is we keep swinging from one end to another, whether it is the department or the judicial authorities. The issue what we think that has attained some kind of settled nature, and even as DRP we are willing to give relief to some assessee. We think, okay, now 44BB service tax, probably we have to give relief to the assessee because there are 10 decisions in assessee's favor. Then suddenly the tribunal turns around and one China shipping company comes where the tribunal has taken a different stand and taken a different view. So I think it is inherent in our Indian mentality to keep swinging from one end to another. So if the tribunal is willing to take a different view, who are we as DRP, who are we to take a view in favor of the assessee? So we go back to the view in favor of the revenue. You may not be, you will have to excuse the department probably, because we feel, yes, that view is also possible tomorrow, some court can take that view. So this kind of swinging mentality I see continuously which is happening. If we simply take the issue of royalty on, say, computer software, constantly there have been disputes on it. Motorola decision came long ago which said it is a sale of a copywritten article, there is no royalty involved in that, and things have sort of attained some amount of finality. Suddenly when Grace Mark came in Delhi tribunal, then immediately all of us were tempted to do something innovative after that. So we started making out computer software. We didn't know what computer software was all about. Sometimes we called it copyright as a literary item protected under the Copyright Act. Then we said it could also be a patent, it could be a secret formula, it could be a process. Whether the process is preceded by secret or not, that even the ITT does not know. So now, without knowing what is the essence of a computer software, we say it could be any of these, and we try to make out a case of software. Even if you look at the High Court, Karnataka High Court says use of or the right to use. Even once if the software is copied onto the computer, there is a Copyright Act is attracted, and you have exercised your copyright, and therefore it amounts to royalty. So that is the view that Karnataka High Court has taken, taking a very strict view of what is use of or a right to use in terms of the Copyright Act. On the other hand, if you look at the Delhi High Court, in the case of Ericsson, then Delhi High Court takes a different view. It says, in this case, the computer hardware and software have come together. The software does not have any independent existence. It is part and parcel of the software. Therefore, it is a sale of and the entire sale has taken place outside the Indian territory. Everything, property in the goods has passed out outside. Therefore, there is no use or right to use. It is not royalty. So there are two different high courts taking two different views on the very same issue. Then we thought, okay, the tribunal is following the view in favor of the assessee, and even SolidWorks, everything was taking that view only. So at some stage, even we in the department thought probably our case is not correct. We should sit back and introspect or something like that. Then suddenly one more decision comes in the case of Reliance Infocom now, which again distinguishes where the hardware and software are not integral part of one another. So now they have made another subtle distinction. So it is probably in our Indian mentality to make more and more subtle distinction, or is it that we in the initial stage hurry to come to a conclusion? We don't do our research of facts very thoroughly. We first come to a conclusion in a great hurry, and then over a period of time when people are forced to do a research or forced to look at the facts more deeply, then more issues come out. Because definitely the fact that our hardware is embedded in a software would probably require a different kind of analysis from a case where the hardware and software were two independent things. But all the same, till this recent decision came of tribunal, hardware, software, embedded or not embedded, sold separately. Same view, the same yardstick was applied in all the cases. So somewhere probably, whether it is the department or the judicial forums or the tax representatives or authorized representatives of the assessee or the professionals, we seem to be in a hurry to come to some conclusion which we want to apply to all cases. probably international taxation is not an area where you should go so strictly by some precedent, because Motorola is a special bench decision and it has to be applied and it is binding. We tend to overlook the minute nuances. And probably that is the reason why we need to go back and forth like this. Now, because today Reliance Infocom, the ITAT Mumbai itself has given a different decision. Again, as authorities of the department, when a favorable view comes, then we are tempted to again explore that angle instead of looking at the other angle. So this is another field which I saw that something new has happened in the last few years, last 1 year or 6 months. Then another issue, even when it comes to international taxation, even issues like section 234B, which is basically only charging of interest, even there the dispute is swinging this way and that way. We for a long time thought that interest is compensatory, therefore it has to be levied. If the deductor has not deducted a tax at source, then the payee has to pay interest on shortfall of advance tax. That was our understanding as tax department, particularly looking at Anjum Ghaswala and various other rulings which always said that interest was compensatory. In fact, many assessees argued successfully in the High Court also that if the payee has already paid tax, the payer need not deduct tax at source, and if he has not deducted tax at source, you can only ask for interest from him, not the tax amount. So all this only showed that the two relate to one and the same, and department can collect one interest in one tax, not more than that. But the decision on 234B in the context of non-resident seemed to imply that department cannot even collect one interest. Neither the payer will deduct nor the payee will pay, because the payer was supposed to deduct, the payee will not pay. The payer did not deduct because the payee said, I am not liable to tax in India. So we had a unique situation where neither the payer deducted nor the payee was held liable to pay. Now again, this Bombay High Court decided, and even as DRP, which doesn't give relief normally on any issue, which even ducked 234BC saying that there was no variation to the income, therefore we will not decide this issue. Even that kind of a DRP, this year we gave relief on all 234B cases. But now we find suddenly the Delhi High Court taking a different view in the case of Alcatel-Lucent. In fact, 5-6 years ago, I remember arguing the very same point in ITAT in the case of R Lines, where the assessee itself had taken a certificate and produced a certificate before the assessing officer that because the assessee is liable to DTA protection, no taxes to be deducted at source on each payments. And thereafter the assessee was found liable to pay tax in India. The question was whether 234BC interest could be levied on that assessee or not, where the payer did not deduct based on the assessee certificate. So in fact, we had produced a certificate before the assessee and tried to distinguish the decision in the case of Motorola, saying that here is a case where the non-resident himself induced the tax deductor, payer, remitter not to deduct tax at source. Therefore, in such a case, can you still say tax was deductible at source, and therefore no advance tax liability arose? But then at that time, Motorola was prevailing and nobody wanted to see the difference. So they brushed aside our arguments and they decided. Now after 5 years, some High Court deems it proper to make a distinction of a case where the payee himself says that I am not liable to tax, induces the payer not to deduct, and then later on the payee is found to be liable to tax. The court is now holding that tax interest is probably liable to be paid on such transactions. So what I find is that we probably rush too much into the conclusion in international taxation. We want to apply some precedent or the other always. We always want to file a huge paper book consisting of so many rulings on the issue. There will be at least 20 decisions of the tribunal, 10 decisions of various high court on a small issue also. And we want to get everything decided based on such kind of precedents with alternate argument. Department will never make out a PE of a single type. It will say there is a fixed place PE. Pending that there is an installation PE. Pending that there is a service PE. If all this does not succeed, then there is a dependent agent PE. So we don't know what PE we want to make out. So as DRP, I have to confirm everything. There may not be any truth in even one of the PE, but I have the task of confirming all the PEs now. I have to say there is a fixed place PE, there is a dependent agent PE, there is some other PE also, there is service PE also. Now there is something new, I understand, called a subsidiary PE, which has been coined out by the AR. So that PE also is made out now. So we rush to make out case, whether it is the department or the assessee, and we tend to rush to conclusions without going very deeply into our facts. And we don't want decision on our facts. Tribunal also wants to decide based on past precedents. So this is something, because of which we find that very often in international taxation, we have decisions which are swinging from one end of the spectrum to another end of the spectrum. Yes, there are certain distinctions on facts which are being made out by the court, and I wouldn't say any of the decisions are wrong. But there are 100 other rulings which have been decided based on these precedents, where the facts have not been appreciated and these rulings have been applied in a blanket form. So I would say that probably as a tax department first, we should go more on facts. Then you as consultants and as representatives of the assessee should also try to concentrate more on facts and try to make out, maybe on facts itself a favorable decision is warranted in a particular case. So we should go more on facts rather than going on these precedents, which I find are swinging so much from one end to another end. Even incidentally, I saw even one more ruling yesterday: interest on refund of income tax. We used to argue with department always whenever there was a PE and there was a refund of income, refund of tax paid, and some interest was received by the non-resident. The question was whether the interest is to be taxed as the income of the PE and hence at the full rate of 30 or 40%, or whether the interest should be taxed at the beneficial rate provided in the treaty for under Article 11. Now, we as tax department definitely want to tax anything at a higher rate. So that inherent intention is there. Of course, you have to justify your case. So we thought once the PE is liable to tax and the tax is paid by the PE, one would assume that the interest on refund received is effectively connected with the PE. But the Honorable Special Bench of the Tribunal said that even that interest is not effectively connected with the PE, because interest is a liability which is a personal liability. It is not a liability of the business or some such thing. It is not a charge on the business. It is an application of income after the income is determined. This is the logic that was laid down in the case of Clough Engineering, and they held that interest on income tax refund received by a permanent establishment in respect of taxes paid of the PE, even that is not effectively connected with the PE. Now I find that Uttarakhand High Court recently has given a different decision, reversing the decision of some other case, not the case of Clough Engineering, I think Pride Forever or something, where they have said that no, once Article 12 is not applicable when there is a PE in India, automatically the interest has to go under the PE article, it cannot come here. Of course, there is no deliberation on the term, on the scope of the term effectively connected, which is probably material for deciding this issue. But all the same, I find that there is so much swinging from one end to another end, which is happening. Relying on this Clough Engineering itself or on this effectively connected, there is one more innovative argument which is made out these days, where there is say a turnkey contract, and some drawings and designs are supplied by the non-resident entity, and it is also doing some installation, it is also providing some offshore supply of goods, and it's a turnkey contract. Then whether the amount received by the non-resident on account of drawings and designs, whether it will be royalty and FTS, or whether it will be effectively connected with the PE and hence liable to be taxed and at the higher rate. So there is a very interesting argument being made wherein the whole amount escapes tax altogether, wherein they say first that it comes within the definition of royalty or FTS, nobody disputes, even under the DTA. So they say yes, it comes under Article 12, but due to the PE proviso on Article 12, it goes out of Article 12 and it comes to Article 7 now. And then having come to Article 7, they say it is effectively connected with the PE, not for any other reason but for the fact that it is a common contract, there is a single composite contract. So based on the single composite contract, which they say is adequate to qualify the condition of effectively connected in Article 12, they move out of Article 12 and they come to Article 7. But having come to Article 7, they say this income is not effectively connected with the PE because the PE had no role to play in respect of these drawings and designs which were all provided from outside India. Therefore, it is not taxable under Article 7. Also, it is not taxable under Article 7. The PE proviso, as I understand based on whatever limited knowledge I have reading OECD commentary and Klaus Vogel and other things, is to give an extended right to tax to the country of source where the non-resident operates through a PE. So the idea is to expand a limited right of taxation contained in Article 12 to an unlimited right to tax under Article 7. That is the purpose of the PE proviso contained in section 10, 11 and 12. But the whole PE proviso has been turned on its head now by using that article to come out of Article 12, go to Article 7 and then come out of Article 7 also. So there seems to be a very floating definition of what what is permanent, effectively connected. The yardsticks for effectively connected under Article 12 and the yardstick for effectively connected under Article 7 seem to be two different things. Something is effectively connected with the PE for the purposes of Article 12, but it is not effectively connected with the PE. Same thing for the purpose of Article 7, the same assessee. So these are some interesting things where we find that arguments are raised. Even High Court tribunal have decided in certain cases in favor of the assessee. There are other cases where somebody suddenly wakes up and they take a different view. So these are all okay. These are all interesting things. Interesting because I can narrate these things in as a speaker before you. You can take these additional grounds before the authorities as a professional. But I think as a whole, we somewhere need to introspect and see why we seem to devote so much time in doing such these are not fruitful things. These are things which could be avoided. So why we are doing things to avoid? The problem is equally there with the department. Ishikawa Jima came and went long ago. It had its problems, it had its correct part also. There was a good part of it which was correct. There was a part of it which according to the revenue at least was wrong. Now after so many years, again people have gone back to taxing offshore supply of goods when there is a composite contract. So I don't know why we seem to be revisiting the same thing where things have attained finality, where a view has been taken, why we want to go back and forth on the same thing. So somewhere we need to introspect and curtail this tendency to litigate unnecessarily by creating an issue which at the heart, which within the core of our hearts we know is incorrect, and try to focus on more important issues which will at least not choke our judiciary in this manner. Then this is what limited I could recollect of my international taxation days in the IT-18. Coming more closer to disputes in TP. The dispute in TP is unending. In fact, I thought my time barring date is over on 30th of Jan and I could devote really some quality time. But our time barring doesn't our pressure doesn't seem to end at all. Whether it is direct tax or indirect tax, there is one assessee who is always litigating. Whether it is international taxation or transfer pricing, there is one assessee who is always in the forefront. That is Vodafone, and we are always busy with something or the other to do with Vodafone. There is Vodafone 1, there is Vodafone 2, there is Vodafone 3. I think we'll reach at least 5 the way the things are right now. So we are constantly litigating and probably we have choked the High Court and Tribunal with all our actions. So transfer pricing is another one major area where the amount of litigation is really very high. Probably as tax consultants and tax professionals, it may not hurt you because the litigations are very high. In the heart of hearts, probably you may be happy also. I don't deny nothing wrong with that also. But somewhere I think we should not be choking the system like this because now we are only servicing our litigation, we are not doing anything qualitatively. There are a lot of disputes. They say, when the monkey, something very beautiful in the hands of a monkey, like some garland or something, then it will just ruin it. So something like that was the LG Electronics case in the hands of the department. Now after that LG Electronics, everywhere they have made ALP now. There is no case where we don't make out an ALP issue. Everywhere we have made ALP. So we have found that the issue beyond all recognition. There are so many issues even now today. Everywhere we make an ALP issue and the ITAT also decides. Whatever is the rationale to decide that particular case, they apply something there and they give some conclusion. But still there are so many issues pertaining to AMP. Probably there is some, it is not that the issue does not have merit at all from department perspective. Brand, what is brand? Brand has to do marketing and promotion. There is no such thing as brand. Today we remember, tomorrow we will forget, we will go to something else. So expenditure for promoting a brand has to be constantly incurred. And no brand can have an existence in any country or any market unless it goes brand marketing and promotion expenses. But at the same time, how much of the marketing and promotion expenses could be said to relate to promote the brand as such, and how much could be said to relate to just promote the sales? It is a very difficult thing to understand. At least we in the department, we are trying to understand how to bifurcate what is really a brand promotion expense, which you sometimes called as non-routine expense, and what is really only a selling expense, which is a routine expense. where we find so many items of expenditure in the P&L account and we are at a loss. Probably some more guidance is required from higher authorities, but so far we have not received any such guidance from anything from higher authorities. Maybe we need to understand and read more. So this is something else. What is for business promotion, what is for brand promotion, what is a selling expense? It is very difficult, the line to distinguish between the two. There is a very thin line of distinction. Then what kind of comparables one should choose for a AMP adjustment? Even there is a lot of dispute. There are cases where the associates have said that we are a manufacturer and a distributor, therefore the whole LG decision does not apply to our case. But recently I find ITAT has itself held in another ruling that no, there is no such thing. The AMP adjustment is warranted in all the cases. I remember originally when we started transfer pricing adjustment in Bombay, way back for assessment year 2-3, we didn't know what this AMP was. No one had really explained to us. So in cases of FMCGs like L'Oreal and few other cases, we tried to make a TNM adjustment. And there was a huge adjustment which ultimately came out and market traveled up to ITAT. And the associate said that these are all third party. My entire losses on account of marketing expense only. I am promoting a new foreign brand. And these are all third party expenses. There is no TP issue involved at all. And therefore the adjustment made by the tax authorities in those years. Those were the good old years when we did not know what AMP was all about. Even associates were innocent enough to claim before the ITAT that these are all expenses incurred to promote the brand of my AE so that I can sell my product in India. So these are all third party expenses. All the entire selling, marketing, distribution expenses are the amount paid to third party. Therefore there is no TP angle involved at all over here. And that argument was accepted by the tribunal and relief was given. And we also didn't feel very bad. We thought somewhere we were wrong in making that adjustment. But now the whole thing has turned in over 10 years. Now there is a totally different color and angle to the whole thing. And this AMP issue has come. There are so many issues in AMP. We did a few cases in AMP. We tried to go for some internal comparisons and tried to get over these problems. Because internal comparison, associate says remove all my selling expense, take only my non-routine expenses for calculating the AMP. Now for the comparables we do not have such data. So how do I exclude the routine and non-routine expense of the comparable and then make it comparable to the assessment? Somewhere I thought the bright line test itself was a mechanism to only identify what was routine and non-routine. But over and above the bright line test, the ITAT wants that only non-routine expense should be taken into account, routine expense should not be taken into account. So I'm really not very clear that after applying if one way anyway applying the bright line test and excluding the minimum which is the routine expenses, what is the further need to segregate selling expense and other brand promotion expense? And if you are actually segregating in a particular case, then where is the need to apply a bright line test? So these are things which are still not very clear. There are some cases where the associate itself says this is the only amount which I have recovered from, which I have incurred, and this is the only amount which pertains to my AE, which pertains to promotion of brand. All other expenses are selling expense. Then can I say that your adjustment will be only pertaining to that amount and restrict it? And in that case, will the ITAT not turn around and say you have not applied any method, therefore the adjustment made by you is wrong? Therefore, through compulsion, even though the assessee himself says, and I also agree that only a certain amount is actually a brand promotion expense for which has some benefit relatable to the AE. Should I still do a bright line test and make a bigger adjustment than what was otherwise warranted in that case? So these are all dilemmas which we are facing. Still the issue is just developing. So we may have to do more research and analysis on this. Guarantee commission interest on loan was a hot topic 2-3 years ago. Now slowly, of course, it is it's not at the peak of its career. You can say it is on the waning phase. ITAT has more or less settled from 10% to 12%. It has come to 0.5% now. Whether or not 0.5% without any security, a bank will give guarantee at the rate of 0.5% commission, I do not know. But that is what ITAT has come out, and I think the adjustments are also being toned down considerably on this issue. But still, there is still a gap. Department may do something like 5 to 6%, and you may have to bring it down to 0.5% by taking it up to ITAT. So this is an issue. Then there are more bigger issues now of share capital adjustments which are being made, but these are of course not widespread. There are some limited companies where these adjustments are being made, highly debated and contested. everybody in the, it's a very interesting thing. You ask anybody in the department that do you agree with the share capital adjustment? They'll say no, it is not at all correct. According to me, it should have never been made. But the moment you say yes, now the member of this DRP, please decide this issue. Then would you like to give relief? They say no, we cannot give relief on this issue. So it is like that. It is not true only for the department. You take it outside, you take it to the High Court. The matter went to High Court. It is not as if the matter did not reach the High Court. High Court said everything, but short of saying that no, it is not income, High Court also did not, they said no, let the DRP decide first. They didn't want to venture into it. It's right also on a matter of lot of factual analysis. This is more a legal issue, I think, rather than factual analysis. But it is all right that the High Court has said that the DRP should decide first, and then with the benefit of the DRP's wisdom, whatever limited wisdom it may be, they may like to decide the issue now. But this is a peculiar thing where anybody who asks, as long as they are not the deciding authority to grant relief, they all unanimously agree that it is not a correct addition. But the moment you say, okay, now you as DITP, 10 cases have come for approval to you, what will you do? I asked my TPO, what will you do? He says, madam, we have made adjustment in the last year. If I don't do it this year, there will be problem for me also, there will be problem for you also. So it is like that. Even the council, he says, these are my submissions, this is the calculation. In case you want to make an adjustment, there is no letterhead, there is no nothing, but this is the calculation based on last year. So everybody, as long as you don't want to take a final call on the issue, they all say that there is no merit in this. When I go to the board, when I talk to concerned member, they say no, there is no merit in it. Why you people are making this adjustment? If premium is received, are you taxing it as income? No, you have not. In fact, the limited premium which has been received, you have not taxed as income. Then why the excess is being taxed as income? Is it okay? Then in that case, why don't we withdraw the appeal in the High Court, or why don't we accept in the writ petition? No. Let the law take its own course. Let the High Court decide. Then we will decide whether to file SLP or not. 99.9% if the High Court decides against the department, there will be an SLP to the Supreme Court also. So these are all very contentious issues where nobody wants to take a call, because the amounts involved, whether rightly or wrongly, whether due to exaggerated quantification or actually also there are huge amounts. So the amounts involved in the disputes are very big, so nobody wants to take a call right away. But whatever may be the other aspects of it, if one really examines the issue very closely, somewhere probably the limited issue over there is that if one presumes that the valuation is correct, and really the assessee has issued the share capital at a price much lower than the arm's length price, if there is no dispute on the quantification part, presuming that, then somewhere lesser money has definitely come into the hands of the assessee as compared to what it would have come if an arm's length approach had been fulfilled. Then to that extent one can say that the assessee's income earning capacity or whatever has been hindered. So this could definitely be the case from revenue's perspective, that had the arm's length approach been adopted and the shares been issued at the price at the arm's length price, then what the Indian issuing company would have received would have been further cash or other reserves to this extent, which it could have invested in its business and earned profit. So to that extent, one can say that there is a value shifting. In fact, we tried to analyze in depth, and we tried to talk to various people as to whether any such issues are involved in overseas countries or not. What we did find is there are detailed rules on a concept called value shifting. Australia, in fact, came up with these rules way back in 1995. Then they have revamped the rules in 2002 again. If you look at the value shifting rules of Australia, it runs into hundreds of pages with thousands of examples. They have considered almost every angle and aspect to it to in fact identify an example which is most closely comparable to our example. We took 4 or 5 people had to sit with those guidelines and figure out which example is most closely comparable to our fact situation in Vodafone or Shell. But they have covered a wide type of transactions there, and those value shifting rules are not only applicable for resident, non-resident, they are applicable even for domestic transactions in Australia. Then there is something called hidden profit distribution, which is there in other countries, where the moment there is a TP adjustment, then the excess is treated as hidden profit, or they call it some other dividend, some special kind of dividend. So they bring these things to tax. So some conceptually certain things are there in different countries. Probably India also has to do a bit more research on this and evolve a greater amount of have a greater degree of understanding and maybe fine tune. Maybe the present law itself provides, because High Court in this case, High Court in the case of Vodafone says, where is the income? Please show us the income. Now, should income be only what we have always understood, or income in the context of Section 92 could be something different from what is there under Section 4 or in a definition in Section 224? Because even 224 contains various capital receipts as income. And it is again only an inclusive definition, it's not an exhaustive definition. So income as such, the concept of income as such includes various items of capital nature also. So can one say that the term income used in Section 92 refers to something broader, because otherwise there would be no sense in putting restructuring and capital financing all etc. as an international transaction in Section 92B. What is the purpose of defining various things as an international transaction if there can be no situation under which any adjustment in those transactions would ever result in income? So these are things which have to evolve over a period of time. Law is still just in the very initial stages. So you are having a 2-day conference. Business restructuring, I must say I am guilty of introducing this new topic into your area of dispute. There also assessees are coming out with some very interesting arguments that okay, there is restructuring, okay, some compensation is to be attributed to the Indian entity, but it is not a revenue receipt, it is a capital receipt. So you may make a TP adjustment, but there is no income involved in that ultimately. So these are all things which are just newly emerging. Whether intangibles are transferred outside or not in a restructuring, whether it is a requirement that some intangible should be transferred, whether merely a profit formula, change of profit formula, that itself amounts to restructuring or not. There is a lot of discussion in the OECD commentary. Australia again has issued a very detailed tax ruling on this subject, covering exhaustively all aspects. They have gone in great depth. Probably we need to look at all these things to analyze our cases in such great depth. The problem with India is that we try to do too many things in too short a time. In 1 year's time, we want to do 700 transfer pricing adjustments in Bombay, whereas I think abroad, even over a period of years, they would not do 700 transfer pricing adjustments. Maybe that is another reason why our quality, whether it is the department or the assessee or the judiciary, who is equally overburdened, why we are not able to go more deep into facts. So with that, I think your 2-day seminar looks very interesting. I wish I could spend the entire 2 days here, but as they say, Vodafone becomes me from there, waiting for written submissions and counter affidavits and all that to be filed in the ITAT. So I'm afraid I will not be able to really enjoy this session for 2 days. But I think it is going to be a very, very interesting session from the kind of topics which you have so carefully chosen. So I wish you all a very happy 2-day seminar, 2-day conference, looking into all these things. I think it will be more fun if you look at it from a detached way. Very often we think that we are the only person to protect all the revenue issues of the revenue. I mean, I am the only protector of the revenue, therefore I have to argue every case, I have to sustain every case, I have to make addition in every case. Similarly, the assessee feels, the representative feels that he is the only protector of the assessee. He has to defend the assessee at any cost. Under no circumstance there can be an adjustment, or under no circumstance there should be an addition. So if we remove ourselves from all these mental constraints and really look at the issue, I think we'll enjoy the 2-day session much more than what we would otherwise enjoy. So I would, with that, I will not stand in between you and the first session. I think Geeta ma'am is waiting very impatiently to start her session. So I would, I would say that I should congratulate you on identifying such very interesting issues. You have identified the latest issues also. At the same time, you have kept those broad ones also, where all individual issues could be covered. So I'm sure this 2-day session is going to be very interesting, and I hope this interaction with me continues. And in fact, very initially also when we were senior AR and junior AR in ITAT, these magazines of Chamber of Consultants used to be lying in our room in ITAT, and I used to always read not all the decisions, but the ITAT decisions and the international taxation decisions which were coming. TP disputes were not in that many number at that time. So the international taxation disputes were really analyzed in great depth. Now I think they have been given a stepmotherly treatment. The focus is more on TP issues, it seems, because there is so much of TP dispute now. So I have always enjoyed reading your magazine, and the choice of topics is really interesting. So I hope you have a very fruitful 2-day seminar, and we can go forward from where we are standing on all these legal issues. Thank you.
friends, you all agree with me that Madam could go on for 2 days actually, and we would know everything what is and how additions are made in each and every case. So with that, I request Ritwik Sanghvi to propose a very well-deserved vote. The dias will change after the time, and then there is no break. Thank you.
Ma'am, this was a very enlightening session, and you mentioned about precedents. I can only say one thing is that in whatever time I have spent in the last few years with Chamber or with Bombay Chapter and Golf Society or with WRC, we have never had such a unique, frank discussion with a revenue official. Thank you, ma'am. And friends, I think you will agree that it is Chamber's karmic fortune today to have Mrs. Shridharan with us, to share with us with so much humility her own insights into where we should go and to what stretch we should reach at. We take your point and we would love these interactions more and more so that we reach a level where we are all probably sharing jokes rather than sharing where the swinging pendulums are going in tax litigation. Thank you, ma'am. Friends, I would please request you all to carry out with a hearty vote. Once we have a change of dice and we start for the next section.
Hello? डाउट है मुझे मेरा कॉन्फ्रेंस शाम को मैं फ्री होऊंगा लेट इवनिंग चलेगा I'll confirm with you. I'm not sure. I'll confirm with you. Is something urgent? वो आपको सॉफ्ट कॉपी आ रहा ना? आपको सॉफ्ट कॉपी आ रहा है उसका? Can you mail that to me? I'll get it done. चलिए फिर डिस्कस करेंगे उसको. उनसे बात कर लेंगे, कॉलेज करना बता दीजिए.